Hey, this is Matt from InvestiQuant. Today is Thursday, October 14, 2021. The markets gapped up this morning, and we have been trending higher since. So we've got, 37 points of range or so at the time of this recording. We're trading up right around the highs of the session, well above yesterday's highs. It's been a strong day so far. So what we'll look at this afternoon is what has happened historically going into the close ahead of options expiration day when you've got this strong price action. So I'm going to select an entry time of 3 o'clock. It'll be set up as a long, and the price action we're going to be adding to this is simply going to be you gap up, and then in the final hour or so of trading, you're trading up near the highs of the session. So in the post-open filters, I'm going to say that the 3 p.m. price is in the top 25% of the intraday range. That is where it's at right now. Can't guarantee that it's going to be there at 3 o'clock, but that is where we are currently trading. So I've got that added here. Next, I'm going to go into the market events library. I'm going to say it is the day before options expiration. That comes from the day before market events, but I'm going to grab it right here from the active today. I'm just going to click on that and add it. And lastly, I'm going to put a couple indicators on there. We're going to put us in a similar market environment above a 10, above a 200-day simple moving average, and then click view results. All right, here we go. These are the results based upon entering the market long at 3 p.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. When you gap up the day before options expiration day, and at 3 o'clock, you're trading up around the highs of the day. This is taking place in a bull market environment. So historically, we only have 20 samples here in the S&P, so not a big sample size on any of these. 13 for the NASDAQ, 24 for the Dow, 18 for the Russell. Win rates on them are all skewed towards the upsides, with some of them a little bit stronger. S&P, 55% of those have closed above that 3 p.m. price. For the NASDAQ, it's coming in at 77%. Now, that's a really high win rate, but keep in mind that sample size is the smallest of the group. So smaller sample sizes are easier to get bigger win rates or really low win rates either way, just because it doesn't take as much samples to do that. Now with the Dow, it's coming in with 24 samples, so that's the largest sample size out of all of them. It has a 71% win rate, and Russell 18 samples, 56% win rate, so pretty similar to the S&P. So if you kind of average them all together, they're still pretty favored as a group. If we look at the average moves, the average win on the S&P is larger than the average loss, and that is the case for all four of these instruments. NASDAQ there, bigger average win, as is the Dow and the Russell. So historically speaking, this pattern, if it still holds up into the close, which we'll find out here in a little bit, has typically favored the upside going into the close. So hopefully you found that helpful. Hey, before I sign off here, there's going to be a link underneath this video. If you guys enjoy these videos, if you find them helpful, please click on that link and vote for us in the Benzinga Awards. We're up for an award for trading technology. We'd appreciate any votes that you can throw our way. So there's a link that's below. Just click on that and click the vote button if you like these videos. That would help us out. We'd appreciate it much. Have a great day, guys. We'll see you next time.